I find this fascinating that this is still not common knowledge. The common narrative is that Bitcoin is just a levered bet on technology. It's basically a high beta tech stock. But really, if that's the case, why don't we see a new all-time high in Bitcoin? Something must be off around this narrative because the Nasdaq 100 just hit a new all-time high. Bitcoin is very far away from its all-time high. My impression is that Bitcoin and technology stocks rather compete for the same kind of capital, for the same kind of investor. The investor that's risk-seeking, the investor that's looking for a lot of growth. They're either putting it into AI stocks or they're putting it into Bitcoin. And right now, all the hype is around artificial intelligence. What we see over here, that's the Bitcoin price divided by QQQ, so the leading Nasdaq 100 ETF, a representation of the performance of technology stocks. And of course, we did have our Bitcoin depressions in the past. 88% over here, the year 2024. Then the year 2018 wasn't that great for Bitcoin either, an underperformance of 84%. Then we had the Terra Luna and FTX collapse, which led to Bitcoin underperform by 72%. And now nobody wants to know about Bitcoin yet one more time. We have underperformed so far by 54%. We can also see with this curved line how the returns, the relative performance of Bitcoin to technology stocks tend to diminish over time. And maybe right now it might make sense to start buying. Maybe, relatively speaking, the underperformance will stop very soon. Now we're going to explore this in more detail in this video. Hi, my name is Gerhard. I've been in the crypto game for the last 8 years. I hit my first million 3 years ago, and I did this mainly through actively trading the crypto market. My performance history is in the linked comment down below. We've got the track record over here over those last 5 years. Not every month I'm outperforming Bitcoin, so there is a bit of fluctuation, but on average my alpha, so that's the portfolio measured in BTC, was roughly 2% per month. And in this video I want to share the approaches that I personally use in order to time the macro for Bitcoin and also for technology stocks. Now this is again Bitcoin relative to tech stocks, and we are just connecting the bottoms. Now we can also connect the tops. Unfortunately, we don't have as many data points, as in Bitcoin tends to be at those lower prices for a longer period of time than it tends to be at those extremely elevated prices. And obviously those two lines are not parallel to each other, but it tells us a story that's not so great, as in maybe Bitcoin long term will underperform technology stocks going forward. This is not certain by any means because the bottoms still show a rising slope, but it's a thesis we shouldn't completely dismiss. The alternative is that maybe we are just now trading in a long-term sideways range, that maybe those tops are close to parallel, the bottoms might be closer to parallel as well. And now the capital just flows from crypto to technology and from technology back to crypto based on where currently all the attention is. No matter how this long-term resolves, what's clear is that the outperformance of Bitcoin relative to tech stocks is diminishing over time. Nobody can argue against that. In other words, it becomes more and more important to time the market. Do you really just want to be in Bitcoin over technology stocks long term? If all you get is 80% outperformance over the course of 8 years, while at the same time you take on the risk of dropping 85% over here, another 70% over here, it appears as if the alpha we get is rather small compared to the additional risk that we take on. It seems like it becomes more and more important to time the market, to buy low and sell high. Now I understand the arguments here. The common narrative again is that time in the market is better than timing the market. But what I'm arguing here is not to get into fiat. What I'm arguing here is to select the right asset class at a particular point in time. Being in fiat currency long term is always a problem because fiat devalues by roughly 6.8% per annum. That's how quickly USM2, the US money supply, expands over time. So being in fiat is a bad idea. Being invested is a good idea. The question is only, what should we be invested in at any point in time? We are always in the market, but in what market specifically should we be in at a particular point in time? And I do think that we can time this. It has worked out very well for me in the last 5 years. And so let's have a look at potential approaches. Let's say this is indeed now rather a game of competing asset classes where sometimes tech wins, sometimes crypto wins. How can we find out whether or not we bounce from here or we fall further, and what should really be now our time horizon? Maybe let's work with moving averages. So let's say Bitcoin underperformed technology stocks for a while and then the price falls below the moving average. We should rather be in tech stocks. That's when the momentum moves towards tech. When it goes above the moving average, then maybe crypto is coming back. Maybe we can trade it this way. The question is, what is the best moving average for that approach? So this here is now plotted on a 100 length ticker indicator for 2-day ticks. So it's actually a 200-day simple moving average that we're seeing here in white. But let's actually run the numbers. So this comes from Bitcoin Strategy Analytics, the premium platform to run backtests on various assets, and here we are now backtesting Bitcoin relative to the Nasdaq 100. And what we see here at the bottom, that's the moving average duration, and what we see on the y-axis, that's the annualized return. And as a reference point, we've got this dotted line. Now we are starting this backtest at the beginning of 2018. That's probably when the sideways trading started happening. So we're not using the very old history of Bitcoin, we're just using the time period where Bitcoin didn't outperform technology stocks that quickly anymore. Starting in 2018, the best moving average historically would have been the 40-day simple moving average. So that's actually this line on the chart. We would currently still be in technology stocks. The momentum is against crypto. And we can also have a look at this directly on the analytics platform. That's how that looks like. Now, how well does this strategy work? We've got the numbers here at the bottom. They actually look quite nice, as in over the time period, Bitcoin didn't outperform tech stocks that much, but following this particular 40-day simple moving average, there is an outperformance of 27%. Now, the question is, how consistent is that outperformance really? Was this just a bit of luck at the beginning and now the strategy underperforms? Or is this a strategy that we can potentially continue to use? So let us look at the details over here. And that's the chart that we are getting. Bitcoin relative to the Nasdaq 100 since 2018. The moving average is drawn over here, this blue line. And then we've got our portfolio value in US dollars versus just buying and holding that ratio. So we do have outperformance, but once we measure this actually in that ratio, so how is the value of our portfolio doing in Bitcoin relative to the Nasdaq 100, so a fixed ratio, we are actually only outperforming up until 2023. In the last 3 years, this strategy tended to rather underperform. So this is by no means consistent enough for me. I don't think that this is a strategy I want to follow. I want to see the value measured in our base currency go up very consistently with very little volatility. This trading strategy, so following the best moving average, I think is not great to time the market. And so that's my fundamental approach to trading anything. I'm not watching the news. I'm not trying to find the newest hot pick. I'm trying to establish trading rules that historically won and outperformed very consistently. Once I've got a trading rule like this, I just follow that rule. So I don't try to re-estimate what's currently going on with this particular asset and try to follow where the crowd is headed. I rather try to figure out where do we have inconsistencies in the market, where do we have reoccurring patterns. Now, instead of trading one simple moving average, which obviously didn't work, maybe we can use 2 moving averages and then trade based on golden crosses and death crosses. So when the shorter term moving average crosses the longer term, we've got a buy signal. And when the shorter term moving average crosses the longer term from top to bottom, we've got a sell signal. So we're looking at the golden crosses and we're looking at the death crosses. If we do that, what moving average combination worked the best? So again, Bitcoin versus the Nasdaq, we're looking at 2 moving averages, and this is now the result. So this is a bit more complex. We've got the slow moving average on the x-axis and we've got the fast moving average on the y-axis. And each of those little dots here represents a single backtest. We're trying to figure out what moving average crosses performed the best for the Nasdaq versus Bitcoin. Green, of course, means positive performance. Red means not so great performance. And here is the result, the 71-day versus 83-day simple moving average. And here are the numbers. This time the outperformance is larger. We are looking at 34% alpha versus buying and holding. For the one simple moving average, it was only 27%. So this looks more promising, but how consistent again is that outperformance? And that's what we see here. In US dollars, it looks fine, but measured in Bitcoin relative to the Nasdaq 100. Again, since 2023, this did not do that well. Really, all of the outperformance of that strategy incurred in the first 3 years. So even a combination of two moving averages is not good enough to make a proper decision if you should be more in Bitcoin or if you should be more in the Nasdaq 100. Let's try something else. Let's try seasonality, as in which months does Bitcoin do better than the Nasdaq 100 on average? So here we've got the seasonality chart. At the top, we've got the average monthly return. At the bottom, we've got the median return. And we can see that there is a reason the crypto space calls October Uptober, because the average return in October tended to be much higher compared to any other month of the year. Now we are currently in June, and so the next 1, 2, 3, 4 months might be rather tough for Bitcoin, at least if history is any indication. But how consistently did this Uptober approach work over time? So here we've got the individual years, 2026 being at the bottom. We've got our months here at the top. Here we've got October. In every year, October had been positive except for 2025. This was the first time when the pattern got broken, when finally Bitcoin underperformed technology stocks. So is the whole situation now flipping? Is maybe November now a good time to buy? Because that historically tended to be rather weak. The answer is that November last year was also weak. So in general, just Bitcoin doing worse compared to technology stocks. So it looks like momentum is not a strong indicator for this capital rotation between crypto and technology stocks. It seems like seasonality is also not a very strong indicator. It seems to also not be consistent over time. But let us stick with that thesis that capital flows from crypto to technology stocks and from technology stocks to crypto, depending on where currently all the attention is. Maybe we can work with autocorrelation. So we look at the past performance and we check how does the past performance correlate with future performance. Now again, the common narrative is that past performance has no indication at all for future performance. But once we crunch the numbers, there is a connect. In other words, if one asset class tended to underperform a lot in the past, it tends to outperform in the next time window. Now, what are the right windows here? Do we look at the past last year, to the future next year? Do we look at the last 2 years, to the next 2 years? Let's have a look at the numbers. So we are looking at the autocorrelation feature. By the way, all of those features here, they are explained in dedicated tutorial videos on the platform as well. So those tutorial videos and the platform, it can all be accessed in premium. And so here's Bitcoin relative to the Nasdaq 100 since 2018. And this is now a 1 year time window. So we are looking at the past year of performance and we check at how did that correlate to the forward year performance. The orange line is a regression line, and this is where we are right now. When in the past year, Bitcoin did worse compared to technology stocks, historically, it did much better in the following year. Now, what we can also see is that those dots don't perfectly align on this regression line, right? There is quite a bit of noise around it. And so the R square is only at 0.46, but still there's clearly negative correlation here, right? We want to buy the asset that's currently not favored. So this does support our thesis. But the question is, can we maybe optimize this R squared? Is the last 1 year versus the next 1 year really the optimal time window? And here is that analysis. So we are optimizing for R squared. We're trying to figure out where do the dots match the best for the regression line. And the optimum is over here. It's at 474 bars. So almost 2 years, 1 year and 46 weeks. When we're taking those longer time windows instead of 1 year to the next year, but 2 years, a bit less than that, to the next 2 years, then we are moving from this scatter plot to this scatter plot. Now here the dots are much closer to the regression line. In other words, our model is better at explaining future performance. Everybody that's saying that past performance has no impact at all on future performance has not seen this chart. There is obviously a connection. We want to buy the thing that nobody wants to buy at a particular point in time, and we want to sell the thing that everybody gets hyped about at a particular point in time. And we should have a look back window of 1 year and 46 weeks. And this is where we are right now. Now, what does this imply? So what is our forward-looking return given our past underperformance of Bitcoin relative to crypto? Here are the numbers. So in 1 year and 46 weeks, which means in the middle of April of 2028, we have a predicted forward return of plus 102%. In other words, Bitcoin is expected to outperform technology stocks by 2x over the course of a bit under 2 years. So that's annualized 45% extra return. Now, I'm not making a judgment call here if Bitcoin will suddenly rally or if technology stocks are suddenly going to crash. This is only a prediction of the relative performance. In other words, if we want to realize that return, we want to short technology stocks and then long Bitcoin at the same time. Now, do we really want to do this? Maybe not, but it gives us a hint that maybe if we now dollar cost average into the market, we should rather do this with Bitcoin over tech stocks if our time horizon is roughly 2 years. How does that then look like here on the chart? It looks like the following. So this is the middle of April, and the circle indicates a 100% increase from here. This is where Bitcoin should be at that particular point in time, 2 years from now. Now, what's important to understand here is that this model is not predicting that we are bouncing directly from here and then reach that level. We could also continue to crash and then revert later. We could see a historic crash that nobody anticipates and then a massive rebound. We don't know how we are getting there. We only know that historically past performance did indicate future performance, and since Bitcoin didn't do that well in the last 2 years, it's likely going to outperform just buying and holding technology stocks going forward. So this whole idea does not clash with the concept that time in the market beats timing the market. We are simply looking at what is currently the most attractive investment vehicle. The most attractive investment vehicle usually is not fiat currency. It's something that tends to generate outsized returns. It tends to beat monetary debasement. And since Bitcoin supply is also capped, since it grows much slower compared to fiat currency, it tends to go up versus fiat currency over the decades. There are different drivers of return here. Technology stocks are going up because everybody anticipates that AI technology will get more and more used over time. Bitcoin goes up because of other reasons. It goes up because it's an additional diversifier in a portfolio, and it tends to not be that much correlated to the rest of the market, but it still tends to appreciate long term because of its favorable tokenomics, right? It only inflates by 0.8% per annum. In the future, even by 0.4% per annum. Now, if you ask me, I do not expect us to directly bounce from here. I think we will at least get into net unrealized profit and loss negative territory, so net unrealized losses, as we did at the end of every bear market in the past, and we haven't hit that yet. I also think that there's a good chance we go below the long-term holder realized price, and that was also a bottom that we had to reach first at the end of every bear market in the past, and currently that price level sits at $48,000. Now, there is no guarantee at all that we're going to hit that price level, right, the 48K, and we also see that the long-term holder cost basis is rather increasing over time. But I think that we haven't yet seen the worst. But I also think that if our time horizon is long enough, say 2 years, then probably Bitcoin will outperform most other asset classes. And in this case, we compared this to technology stocks. So if you're asking me, we probably will see some kind of very negative news, some cleansing event, some institutional investor or ex-player like a larger investor or a larger exchange going bust. And then after that, the price has come down enough that we then see long-term holders entering the market and buying up at those cheaper prices and generating positive momentum again. If you haven't yet, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Access to the platform is here in premium. That pops up here on the screen. My own trades are also shared over there, including a lot of tutorials. There is a 7-day money back guarantee. So in case you don't like premium, just message me within the first 7 days and I'll refund you. No questions asked. There's really no risk for you. Thanks for watching and see you next time. Cheers.